Hello and welcome to your November Investor Update. I'm Pacome Breton, Head of Portfolio Management at Nutmeg. In this update, I'll cover market performance in October. I'll be looking at the impact of the UK's autumn budget and how US politics is affecting financial markets. I will also review the quarter's corporate earnings, which, in spite of everything else going on, remains a key indicator of how companies are performing. What happened in financial markets in October, and can you explain the main drivers? In October, most markets, whether in bonds or equities, were down for the month. This was after a strong recovery from early August and the summer market turbulence. In detail, equity markets generally declined between 1% and 4% globally. US markets outperformed other regions once again, with the S&P 500 down less than 1% and similar performance from the Nasdaq. And yet, both continue to outperform other equity markets so far this year. Returns were more mixed in Europe, where equities lost almost 4%. And UK shares performed slightly better, with the FTSE 100 large cap index losing 1.5%. However, the FTSE 250, which focuses on smaller British companies, lost nearly 3% for the month. Sterling weakness may have contributed here, and the domestically focused FTSE 250 can be more affected by cost rising when the pound declines. One standout country to mention was Japan, where the yen, after a strong performance over the past 2 months, reversed some of its gain, which typically has an inverse impact on Japanese stocks. With a weaker yen, Japanese equities became cheaper for foreign investors, and it's one factor among others that helped the main index, the Nikkei, to gain close to 2.5%. And this made it one of the few markets to make gains during the month. A final comment on equities is around China-related stocks, which were strong performers in September due to economic measures taken by the Chinese government. After a strong rally, they gave back a limited portion of their gains, but remain ahead of other regions looking at the period from September to end of October. What impact did the UK budget and the final weeks of the US election race have on markets? News on both sides of the Atlantic had a more significant impact on the bond market. It was an interesting month on that front. Economic data was generally neutral to positive for bond prices. Inflation data continued to cool, and the US job market remained stable, showing a positive trend without any unexpected strengths. However, bond yields increased throughout the month, and bond yields rising means pricings are falling. Starting in the US, Treasury yields were impacted by the increased likelihood of Trump regaining the White House, which is seen as potentially inflationary and therefore not particularly favorable for bonds, and US Treasuries declined. Meanwhile, in the UK, there were concerns surrounding the effect of the UK autumn budget, and the immediate reaction in the bond market was initially positive, especially during the speech. However, as more detailed information was released by the Office for Budget Responsibility, the OBR, the bond market reversed all initial gains and much more, and as a result, UK bonds had a poor month. On our end, we increased our position in UK gilts towards the end of the month, following the initial market movement. Our timing wasn't optimal as we bought in before the post-budget shifts, but we think current yield is attractive long-term. Earnings season coincided with October. Was it a good quarter overall for UK and US companies? Well, as usual, the US remains the most closely watched market in terms of equity earnings due to the size of the US equity market. And I have to say the results so far have been positive. The typical analyst forecast was relatively moderate for the quarter, and corporate earnings outperformed expectations by a significant margin. Large tech stocks in the US continued to perform positively, with companies like Alphabet, Google's parent, Amazon and Tesla largely exceeding expectations. Some like Apple and Facebook parents Meta posted slightly disappointing numbers or lower growth than anticipated, but most were still outperforming, and the earnings paint a favorable picture for profit growth, which is crucial for equity performance. In the UK, there were some stronger earnings releases from companies like HSBC and Shell, which was positive. And overall, the current environment seems to be supportive for company profits in both the US and the UK. Thanks for watching. If you have any questions or suggestions for a topic you'd like us to discuss in next month's investor update, you can contact us via social media, email, or in the comments section below this video.